All right, I'm going to start off this video with a quick look at gold. I warned that we were going to probably get an attack. We had options expiration on Friday. Probably going to get an attack, so I wasn't really expecting too much follow through after this breakout above 1835. And I think you can almost bet the farm that we're going to continue to see attacks into the FOMC meeting on Wednesday. So it's very possible that this is going to churn a little above and a little below this 1835 for the first half of the week. But I think metals are going to break out to the upside. So a couple of things here. We're potentially right translating this daily cycle. It's rallied. Actually, let me count the days here. Yeah, so this was day 25. So this is, the odds are very high. This is a right translated cycle. So if this daily cycle was going to roll over, left translate, come down, make a lower low, probably should have done it. We should have probably had the top by day 10 or 12. So, a new high on day 25, strongly suggests that this is a right translating daily cycle, and that we were in the advancing phase of a new intermediate cycle. And that's also confirmed in that we've got a pattern of higher highs. You can see this high came above this high, and higher lows. So this corrective move and this pivot occurred well above this previous daily cycle low, and I guess this is a kind of a weird intermediate cycle low. So I think we can expect some churning back and forth in here. Maybe we form a little coil, but I think the breakout is probably going to be to the upside. Now I'm going to put the odds at 70% that we're going to get a breakout to the upside after the FOMC meeting. There is the smaller possibility, maybe 30% possibility, that metals will drop down into their first daily cycle low. That could also happen. It's not inconceivable that isn't going to happen. But because this cycle appears to be right translating, then I would expect, if we do move down into a daily cycle low, that it will bottom above this pivot right here. All right, so that's what we've got for gold. Now I want to go over what I think is probably the main problem with most retail traders, and the reason retail traders don't make money, and that reason is leverage. So the vast majority of people that subscribe to financial newsletters, they all want the same thing. They all want to get rich quick. And they're looking for somebody that, quote unquote, knows, where the market is going. And what typically happens is a particular newsletter maybe will have made 5 or 6 really good calls in a row. And so the average retail investor, looking for some guidance in the market, sees that, this guy's made some really good calls, and so he obviously knows what's going on, and so I'm going to subscribe to his newsletter, and maybe he makes another good call, and so now you're really convinced that this guy has, a perfect system. And so then what do? You leverage your trades, usually massively, either with 3 times ETFs or with options. And here is the problem. Even perfect setups fail from time to time. No matter how good of a system someone has, it's going to fail at some point. And then what happens is maybe your market analyst, maybe he's gotten 5 calls in a row right. Maybe he's gotten 10 calls in a row right. But if you put on gigantic leverage, expecting that 11th call to also be right, and it just so happens that that call is the one that doesn't pan out, then you've taken 10 steps up, and then you take one gigantic step back down, and you end up with a win rate of almost 95%, except you're still losing money. So this is unquestionably, this is what is causing most people to lose money. So cycles are pretty good they're really pretty good for timing the stock market. Not very good for timing energy. Energy is a bit too erratic. They're semi-useful for timing currencies and metals. Both of those markets are somewhat interconnected, and they're the most heavily manipulated markets on the planet. So cycles, they work modestly well for timing metals and currency trades, but the manipulation can really mess that up from time to time. So I'm going to give you a perfect example here of a perfect setup. So we had this move coming out of this. This one coming out of this intermediate cycle low. We had a perfect setup here to put in a daily cycle low right in here somewhere, and 9 times out of 10 we would have gotten another daily cycle that would rally up and at least make a higher high. So the odds were hugely in favor of buying in this zone, producing a winning trade, at least a modestly winning trade, or something that you could get in and then put a break-even stop. And so what happened, of course, is that when this almost perfect setup unfolded, many traders over-leveraged. And then what happened? The perfect setup just didn't pan out. The Fed started talking tapering or whatever it was. I can't remember. But anyway, whatever it was at that FOMC meeting, that it just turned the complete tide of the market, and it ruined an absolutely perfect setup. And then that turned into, of course, a losing trade. And now if you weren't heavily, or if you weren't leveraged, there was no serious damage done. You made some really good money on the way up, and you gave some back here. But you'd had to hold all the way into here before you actually lost a lot of money, or really lost any money on unleveraged trades. However, if you didn't pull the trigger down here, you were nervous, your emotions needed to give you the all clear, and then you pulled the trigger, somewhere up in here, and then this perfect setup for a daily cycle low right in here, and then a higher second daily cycle was setting up. Now your emotions have given you the all clear, and now you're massively leveraged. You're going to get rich, and then the trade just doesn't pan out. And any money that you made on this rally here, you gave it all back and then some with this leverage trade. And this is what plagues retail traders without exception. I can almost guarantee this is why people lose money with a system that is a robust system and does produce results over time. You can sabotage that and ruin a perfectly good system with leverage. So that being said, let me go to the stock market here real quick. If I can get this to switch over. All right, so let me get rid of. All right, so here is the stock market coming out of that 4-year cycle low right here. it's been really easy to make money for almost 2 years in the stock market. I've warned and warned people that once the parabolic bubble phase came off the table, that at that point, I think it's going to be a difficult year. I think it's going to be hard to make money. I think we're going to have a very erratic, choppy market. And the problem is that traders have the memory of this. And so they're going to assume that this is going to continue. And at this point with the Fed going to start tapering soon, and they're going to try and raise rates, I don't think there's really much chance at all that it's going to end the long-term secular bull market, but I think it is going to change the market environment. We're not going to have an easy time making money like we did here. I think this is going to be very choppy. And if you're going to try and use leverage in a choppy sideways market, you're going to bankrupt yourself this year. So, I've warned and warned my subscribers that 2022 is almost certainly not the year to use leverage. And if you're going to ignore me and do it anyway, I've given people the correct strategy for how to use leverage so that you don't do any serious damage to your portfolio. If people will follow that strategy, they can satisfy their addiction for leverage, but it almost certainly will not work this year. You're going to lose money. And if you'll follow that strategy, you'll lose a little bit of money, not very much. You won't hurt your portfolio. And then when the next trending move starts, then you'll be there and be able to take advantage of it. If you ignore me and you want to try and leverage into this market, assuming that we're going to continue with this easy trending market where it's easy to make money, you're going to be disappointed. Pretty sure you're going to be disappointed, and you're going to have massive losses this year. This year is going to be a year for protecting capital. Try and hit some base hits. Home runs are almost certainly going to be out of the question. Just make sure you don't lose a lot of money, and that means almost certainly no leverage this year. And I think that's going to apply for metals as well as energy. Commodities, I think maybe could continue giving us a nice trending move into the middle of the year, but then at some point here, the 3-year cycle in the CRB is going to be due to top. So we may still have a trending move in energy for a while, but then I think energy is going to get difficult as well. And metals, the cartel is going to continue to hit metals. They're probably going to make it as difficult as possible. So while I do think we're going to break out to the upside, we would have to break out violently in order to cause the cartel to cover their shorts and get a big short squeeze coming. So that is a possibility, but I'm not prepared to tell people to use any significant amount of leverage in the metals at this point, because I'm not sure that the metals are going to break the manipulation hard enough to cause the cartel to have to cover and give us that giant move. I hope that we do, but I'm not going to put on a whole bunch of leverage assuming that scenario is going to play out.